Hi, good morning, good day, wherever you are. This is our global webinar, Real-Time Daily Trader Ideas. We have 5 days a week, 5 different traders. We will speak about trader ideas, strategies, market screen, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Tuesday, 2nd of October, 2018. Welcome to Admiral Markets. We will start with our risk disclaimer like every day. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the long detailed form there. Also other informations like you maybe like to see, like key information documents, the kits, everything to find on our web pages like admiralmarkets.com. Also information about retail clients, professional clients. If you are in the European Union since August 2018, there's a different offer for retail clients and professional clients. A picture shows more than 1,000 words. If you see DAX 30 euro dollar as 2 prominent examples, the margin requirements could be quite different for retail clients and professional clients. A picture shows more than 1,000 words. If you believe you like to apply for a professional client status, you can do it online via our webpage. There are some differences between retail clients and professional clients. For example, retail clients will get an unlimited protection against negative balances. Professional clients not. Some brokers like Admiral Markets have an additional protection. We call it a negative balance protection policy. Here you will get an additional protection up to 50,000 British pounds, what is round about 70,000 euro. Check all these details out, also the trade-offs, everything via this specific link on our webpage, admiralmarkets.com. This is me. My name is Jens. My English made in Germany, but I'm not the main speaker. I'm just a German guy from Admiral Markets. We are an international broker, over 18 country offices. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. And on Friday, it's DX Day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you'll get many benefits only with us. For example, DAX 30 euro dollar, triple spread of just 0.8 points or pips during main trading hours without additional commission. Also here, all details, you will find them on admiralmarkets.com. Also, you can contact us, call us, send us email, or visit the other channels like YouTube or Facebook. Also here, everything linked on admiralmarkets.com. And now, enough from my side. Time for our day trader, Paul. Good morning, good day. What's your view to the markets today, Paul?
Good morning, Jens. Good morning, everybody. Thank you for the introduction. As always, I hope you can hear my voice, and I hope you can now see my screens. Here we are, ladies and gentlemen. Tuesday, 2nd of October already. Okay, 2nd of October. So we're into the final calendar quarter of the year. Okay, normally it's a rather eventful quarter. There's normally lots of trading action for us, and we have a little bit of calm before the storm. Okay, of course, this week we have the big number, of course, will be NFP out on Friday, and invariably there will be people sort of looking to position themselves for that. We've also got Mr. Powell speaking. I think he's speaking later today, and undoubtedly, his commentary will be analysed, and that will have some sort of impact. And then here in the UK, we've had the sort of the Tory party conference, and watching both the Conservative Party and the nation still pull itself apart about the sort of impending Brexit moves over the next 3 to 6 months. So there's lots of things going on, and invariably they will have an impact upon the markets. We've also had the sort of coming out about the sort of detail between the trade deal between the US, Canada, and Mexico. As always, with these things, the devil will be in the detail, and that will, of course, come out over the next few days, weeks, and months. But invariably, it's already had a little bit of impact on markets. I'm going to show you a little bit of that later on. But what I thought I'd start with is DAX. Okay, I know a lot of Admiral Markets clients are very keen watchers, very keen traders of the DAX. This is the 4-hour chart. Okay, for those of you joining me for the first time, here we have my charts are quite simple: a blue 20 simple moving average, a red 50 simple moving average, and a green 200 simple moving average. I have fractals on, and then I just draw in levels of support and resistance and particular patterns. This week, or rather last week, we talked about, was there a little bit of a flag pattern forming there when we were here last Tuesday? I said that I wanted the price to sort of drift down towards this area here, okay? I wanted us to drift down to about the sort of 12,250 level. Unfortunately, with a 12,250 level with sort of a target around about the 12,400 level, and we got down to about 12,270. But as you can see, the sort of the price was rejected by that sort of 50 and 200 period moving average. If you're an active intraday trader, you've been able to sort of see that and work with that. But it was just this is what happens sometimes. We the best laid plans we have there, and it actually it just got 20 pips away from our entry before it flew its way up to the target. When I look at DAX now, okay, I'm kind of interested to see here that, price rallied back up to the 20 and 50 there, okay, and we've rolled and reversed, and we look down there as if we're going to have a little bit of continuation move down on the DAX. Personally, I'd be kind of interested to see could it come back up to the 200 there, about 12,260. That's where I'd be looking to sort of get on board there, looking for an opportunity to trade. Just when I look for an absolute trade for the moment, I'm kind of a little bit concerned, a little bit worried about the sort of the price action we've had here this morning, right? It's a little bit volatile, a little bit erratic. Okay, there's clearly some moves going on there, and personally for myself, what I'd be doing is I'd just be watching and waiting to see how that plays out over the next hour or two, and especially as we move towards the US session. And that has an impact on the US session, which we will talk about a little bit later on in this particular moment. So as I said, I'd like to say I think we're on the bearish side. I'd like to see maybe a move back to around about that 260, maybe 12,250 level. But when I look at it right this moment, I'll just be waiting to see how this kind of little bit of volatility and movement that we've had over the last sort of 90 minutes, how that kind of plays out for us. I know that some of us have been watching gold, and I've had questions about that over the last couple of sessions. Personally, if I bring that up here on the daily chart, we've talked about great downtrend, okay, and we talked about how actually realistic for about the last 6 weeks it's been a little bit of a consolidation there. Hopefully you can see there between around about 1210, 1212, or right in about 1190. What we had over the end of last week is, we had a little bit of a break out of it, but actually what we've happened is we've moved back into that range. I think what I talked about it, that if we broke to the north side and held above, then I'd be looking for maybe a long trade up to around about 1275, 1280. If we broke to the south side, I would have liked us to sort of maybe move down to around about that kind of 1170, 1175 area, okay, where we've traded well here sort of a couple of months back, and I'd be looking to see would that be forming a double bottom, or would it be giving us the opportunity to sort of to sort of take an extended leg down. What I look at today at the moment is I think if we're going to back up into that range and hold, then I'd probably be looking for us to maybe drift back towards around about the sort of the 1200 psychological number, which is also where the sort of daily 50 period moving average would be, and I'd be sort of just looking to see what actually happens when priced there. Does it give me a kind of a bearish signal, in which case I'd be looking for maybe a shorter term sort of shorter term leg back down to test those lows at around about 1185, 1183, or do we just go back into the range? And I think part of that, there's an element of that is linked to what we're seeing with the dollar, okay, and that's what we'll move on to have a little look at now. So excuse me. So here we go. Let's get our dollar index up now. Dollar index has been it's been interesting over the last couple of months. All right, okay. It's been interesting all year really for us as traders. But the last couple of weeks have been there's been some twists and some turns in the dollar index. Okay, and of course we want to know what the dollar index is doing, because of course it's the big daddy of the FX market. So we want to have a good handle on it. And you've heard me for weeks and months talk about this 95 level. Okay, we were pushing up against it. we broke it, okay, and then we thought we may get a higher move, and then we got a very bearish, okay, weekly evening star formation formed. We had a little bit of a pullback before we moved down, and we broke a trend line, and we thought we might get maybe a bit of an extension back down to around about the sort of 92 area, okay, but actually over the last week or so, you know, we've had a little bit of a change in the dollar. Undoubtedly, that will come from a little bit of the sort of as the news about the sort of trade deal, the sort of new North American trade deal seeps out, and one or two other areas that are working on. And actually now you can see that, you know, we're, you know, not only have we reversed ourselves, but we're back up above 95, you know, and you know, quite strongly. Now, of course, this is a weekly candle. We're only into Tuesday, okay? We've got a lot to go this week. But you know what I'd be saying is, you know, a close, if we come Friday night, we're having a close above 95. Well, that could be and would be a very you know, pro dollar, very strong sort of strong move. So I'm going to be watching it this week, okay? I'm going to be watching the dollar as we roll towards, you know, Powell's commentary later on today, as we get NFP on you know, Friday. I'm going to be looking to see, you know, what impact is that going to have on the dollar, okay? And a weekly close above 95 for me would be you know, very strong dollar, and then, you know, and then we're starting to sort of get build a narrative about a further move north, which is not what Mr. Trump wants. He wants a weak dollar, okay, but you know, he may not get the final say in that, okay. The market forces may push upon that, okay, as we see how that works out, that particular deal. And we'll have a look at the dollar against the Canadian dollar in a moment, just to see how that is already impacting the markets. So as I said, the dollar's it's been twisting and turning. Okay, the last sort of 6 weeks, it's been twisting and turning. That has probably had an impact on, you know, the sort of gold. It's had an impact upon a couple of the other instruments, also a little bit on oil as well, which we'll look at also in a moment. So keep an eye on the dollar index. So of course, if the dollar index is maybe not giving us an exactly, you know, crystal clear message, well then, you know, then we can have a look at, you know, the euro dollar. Okay, I know a lot of the Admiral Markets clients are very keen traders of euro dollar, and you know, we've talked about this last week. You know, we talked about, here we are, the daily chart, how we'd got above about 1730, 1750. We were holding up there. Okay, it was a bit of a topping formation, but we were talking about, you know, if it can hold above there, then, you know, then you're looking at moving up towards about 1920, towards the 120. But, you know, we haven't been able to do that. You can see towards the end of last week, when we got dollar strength coming into the market, we also had euro weakness there. And we really collapsed there from about 1740. And we're now down back towards this 15 level, okay? This, so, you know, 115.20 zone. Hopefully you can see that it's, you know, it's been a regular sort of regular level of support, okay? The last time we broke down beneath it, we came all the way back up. You know, and what I'd be looking for is, once again, you know, that just heightens that euro weakness, dollar strength story, okay? So once again, I'll be looking to see, you know, can we get closes beneath 115? All right, closes beneath 115 is just reinforcing a tale of, you know, euro weakness and dollar strength. And then, you know, if we that's the tail we're looking at, well then, you know, then we're, you know, clearly we're looking back down towards the kind of 113.50 zone. I'll be looking for little swings, opportunities for us to sort of, you know, drift our way down there. There's another example of this dollar strength story coming back is if I look to the dollar yen. Here we go. This is the daily chart here. Okay, the daily chart. It's and you can see that pretty much, you know, for the last month it's been one-way traffic. What we've seen is you know, a story of dollar strength, but also a story of Japanese yen weakness. Okay, we've seen a fair bit of fair bit of that happening. Now, you know, one of the little interesting points we sort of talked about. Okay, we've talked about here on the mastering the 4Ms of trading webinars that you know, we touch upon on every Monday at 4 o'clock London. Yesterday we talked about when prices break out, when they put in small, you know, inside bars. That might be the opportunity to sort of to get a trade on the new trend, and that's what we've seen here. Okay, but this is it's a tale of dollar strength, Japanese yen weakness. So, you know, we've seen an element of, you know, strength there in strength against the euro, strength against the Japanese yen. I know some people want me to have a look at pound dollar, so let's see if that story is continuing through with there. And if we look at that, okay, if we look at that on the pound against dollar, here's the weekly chart. We spoke about this. We spoke about this just I think it was last week or the last 2 weeks, about how we'd had a great run down here, great sell off of the sterling, okay, which showed us a bit of dollar strength. We then had a nice flag pattern forming. This is the flag pattern forming on the weekly chart. I like to see flag patterns finished with the rejection candles, and we had a really nice one there. We'd been rejecting off that 20 period moving average, and what's happened is we've drifted down there, okay. And I think we talked about looking around being sellers around about 130, 150, and now here we are back beneath 130. And if I look at the sort of the daily chart, maybe just try and sort of tidy up my sort of trend lines here on the daily charts, okay. What I'd be looking for is, we've got, as I said, we've got the Tory party conference going on at the moment. So on one side of the Atlantic, we're seeing tales of dollar strength. On this side of the Atlantic, we have sort of Theresa May fighting for her life, basically her political life, and fighting for the political life of her Chequers plan. And I suspect that what we will see is if the markets are unconvinced by what she says this week about, both her future, the future of the UK, the Brexit negotiations, the Chequers plan, then I think we will see a continuation of that sort of sterling weakness, dollar strength. In which case, be looking sort of to break that trend line. Maybe it'll come back up and kiss it, okay, and then you're looking really back down towards a move down towards around about that 127 area, and that's what I'd be looking at there, okay. So, Theresa May has to pull something out of the bag this week, and if she fails to, well then, I would expect sort of sterling weakness in the short term, okay. So you've got on one side, you've got a story of dollar strength, okay. We can see it in the dollar index. We can see that gold is hovering around. We can see the euro dollar has been falling, okay. We can see now pound dollar has been moving away as well, okay. And if we look at one or two of the other dollar pairs, something like dollar Swiss franc, I know some people are interested in that. Well, what we can see is, we had a great trend here, okay, for the 6 weeks, which was effectively all about the Swiss franc moving towards being the top of the pile, and sort of, replacing the dollar as the #1 currency. But a bit like all the others, ladies and gentlemen, you can see here, okay, that that changed towards the end of last week, okay. That's what's happened here, and once again, we've just got more confirmation of dollar strength, okay. So we've seen dollar strength against the Swiss franc, against the Japanese yen, against the pound, against the euro. All right, hopefully you're starting to build a picture that we're getting dollar strength, and as I said, if we get a dollar index close above 95 there on the weekly, that once again it just all builds that narrative of particular strength across the board. One thing as well is that kind of interesting, confirms that even though we're seeing dollar strength, what we're looking at here is the dollar against the Canadian dollar here, okay. And I was kind of we had a little bit of a trade at the end of last week. We had a big key reversal bar here on the 4-hour chart, which dropped down nicely to the 423 extension. But what we had on Sunday night was, we had a gap, okay. You can see, we closed here on the Friday, we opened here on the Sunday, and we actually had a gap that did not fill, all right. We had a gap that did not fill. So, what I'd be looking for is, I'm pretty expecting gaps to fill. I see that we've had a bit of a reaction, okay, here, and what I'd be looking for is, invariably a case of, we've had a bit of a reaction, and I'd want to see, could we drift back down to around about that 128 area, okay, 128.05, 128 area, drift back there. Would that now give me a sort of a nice sort of short-term long trade, stop down there beneath the lows around about 127.79. So I'm in at 28.04. I'm risking around about 25 pips, and then I'm looking up to around about 129 to fill that gap. So I'm risking about 25 pips for around about 95, 96 pips of possible profit. To me, that's about a 3.8R trade. So for a short-term trade, for me, that's a nice trade. I like to work on asymmetric reward to risk. That's what I like to see and what I like to do. And that to me is a little bit of a sort of a good reward to risk trade that to sort of finish off the session. So I don't know if we've got time left for a question or two there, Jens, just to finish us off for the last moment or two. Would that help our clients?
Yeah, one question about gold. So maybe also gold or mid-term or long-term. What's your view about gold? Is one question of the live participants.
Sure. Okay, so we talked about it on a like an intraday basis, all right. On a longer term basis, okay. Let's maybe go out to the monthly chart there. We can zoom in a bit. Okay, on a monthly chart, okay. We've over the last few years, all right. We've been pretty much in a bit of a range, okay. I'll be looking at a range around about 1350, 1375 to the top side, and down towards about sort of about 1050 to 1080 there on the lower side. And currently on the monthly chart, we've been drifting down, okay. We've drifted down, we're beneath the 50, okay. And we've had a nice bearish trend there on the monthly chart. And if I look at the weekly chart, okay, the weekly chart is just a little bit reflecting there about what we've just talked about there earlier, namely that if we get a strong break, well then maybe we'll get a look down towards around about the sort of I'll be looking 1180 to 1160. But then, my thought is, if does it put in here the sort of a double bottom here, okay? If it puts in a double bottom here, okay, which would give me rejection candles there, okay, rejection candles maybe a next followed by a higher low. Well, then as of a media term towards the end of the year, for let's say for the next quarter, the end of the year, I'd be looking at the possibility of maybe a buy towards around about that sort of 1235 towards sort of 1275 if I was being very, very optimistic. So that's what I'll be looking at for there, Jens.
So thanks for today. Tomorrow is another day. We have 5 days a week, 5 different traders. We will speak about every day with a different trading style. And if you like Paul, every Tuesday it's Paul's day. And if you like different trading styles to take a look to, just visit us another day. For example, Monday it's more the institutional Forex for you, and Giancarlo on Wednesday, just take a look. Hope to see you all again. And if you'd like to see and watch that again, couple of hours later, it will be available as a recorded video on our YouTube channel. Just visit youtube.com/AdmiralMarketsFX and you can see it again and again. Thanks to Paul. Have a nice day. Good trades all the time. Greetings from Berlin office. Bye bye.